Hello everyone, I'm Jacqueline Teria, a level 100 become accounting student of the University of Cape Coast, a member of Group 6, and we will be presenting on single entry and incomplete records. Our main focus will be on the preparation of income statements and statements of financial position.
Okay, so our data for the presentation is from Pakwesi, who has been in business for the last 5 years as a shopkeeper but does not keep proper books of account. So we are going to prepare the income statement and statement of financial position for the business, which is Menjobex Enterprise, for the week ended 23rd June 2023. So we have assets and liabilities for the beginning and end of the week. We have shop premises for the beginning, which was 144,000, and the end was also 144,000. Furniture and fittings was 3,000, ending was also 3,000. Inventory for the beginning was 106,400, and the end was 96,000. We have creditors to be 12,000 at the beginning of the week and 15,000 at the end of the week. And our cash was 10,000 at the beginning of the week, but no cash at the end of the week. So during the week, we had discounts allowed, which was 1,000 cedis, salaries of 37,320. Additional capital introduced was 30,000. Cash purchases was 15,000. Rent was 1,200. Wages and salaries was 350. And other operating expenses was 830,000. So we are going to prepare the statement of financial position and the income statement for Menjobex Enterprise.
In order to prepare the income statement and the statement of financial position, there are some relevant accounts which needs to be opened or which needs to be adjusted. And to take into consideration, the first one we're going to talk about is the cash account. And in the cash account, we are going to prepare the cash account to ascertain the cash balance at the end of the week. So the cash balance at the beginning of the week was 10,000 Ghana cedis, and 37,320 was received in respect to cash sales. Pakwesi also introduced 30,000 Ghana cedis as capital, as additional capital. And that is not it. There was also some payments that were made within the week. Purchases was 15,000 Ghana cedis. Discount allowed was 1,000 Ghana cedis. Other expenses 830 Ghana cedis. Wages and salaries, which was 350 Ghana cedis, and rent, which is 1,200. So once we add all these payments and we subtract it from the receipt, we are going to get a cash balance at the week, which is 58,940 Ghana cedis.
So since we are dealing with incomplete records, there are a lot of information that are missing out of our transaction that we have to work them out in order to ascertain the opening capital that we will use to prepare the statement of financial position for the year. So now, let's move on to how we will ascertain that opening capital. In the first place, we have to prepare our statement of affairs. And in preparation of statement of affairs, you have to list all your assets. After listing the asset, then you deduct the liability from the assets so that you ascertain the opening capital, which we will use to transfer it to the statement of financial position. Now let's move on to how we will ascertain this opening capital. In the first place, we have a lot of assets here. That's shop premises, furniture, inventories and cash. And per our research, we got from the business that we did the research, the shop premises was amounted to 144,000. And furniture and fittings was 3,000. Inventories was 106,400, and cash was 10,000. And the total asset amounted to 263,400. And per the liability, we got only one liability, which is creditors, which amounted to 12,000. So we deduct this 12,000 from the 263,400 in order to ascertain the opening capital, which is 251,400. So this is the amount that we will transfer into our statement of financial position in our workings.
In order to ascertain your credit purchases for the business, you open your creditors control account. Opening your creditors control account, you credit it with the creditors balance at the beginning of the week and debit it with the creditors balance at the end of the week. The difference gives you your credit purchases. we need to ascertain our total purchases for the business, and so we add our credit purchases and then our cash purchases. The total gives you 18,000 Ghana cedis, which will be transferred to the income statement.
Okay, so after making relevant adjustments, you then move on to prepare your income statement for the week ended 23rd June 2023. So you start with your sales, which is 37,320. You then less your cost of sales. So opening inventory 106,400. Purchases 18,000. You add the two to get 124,400. Then you less your closing inventory, which is 96,000. So when you less 96,000 from the 124,400, you get your cost of sales, which is 28,400. Then you less this cost of sales from the sales figure here. So when you less 28,400 from 37,320, you then get your gross profit, which is 8,920. So if you have any additional income, you add it to this one. But here's the case that we don't have, so you just then move on to your operating expenses. So we have our discount allowed, which is 1,000, rent 1,200, wages and salary 350, other expenses 830. So you sum all this together to get your total expenses, which is 3,380. So you then less these total expenses from your gross profit, which is 8. So you less 3,380 from 8,920. Then you get your net profit, which is 5,540.
Okay, so after you are done preparing your income statement for the week, we will move on to prepare the statement of financial position for that week. So in preparing the statement of financial position, we'll first start with our non-current assets. And the non-current assets, we had premises, that's 144,000. Furniture and fittings, that's 3,000. We didn't have any depreciation, so the total was 147,000. Then we move on with the current asset. We had inventory 96,000, cash in hand. In the notes that my friend explained earlier, that is the 58,940. So in total, we had 154,940. With this, we have to less our current liability from the current asset to get our working capital. So our current liability, we only had creditors, that's 15,000. So when we less it from it, you get 39,940. That's the working capital that we got. So you add it to the non-current asset to get our capital employed or net total asset. So that is the 286,940. So now we'll move on to look at the finance by. That is the money that they used in like catering for the business. So we had capital. That's what my friend did prepare. That's the statement of affairs. So it was 251,400. Then you add the net profit, that's 5,540. And in the question we had some additional capital that the man introduced into the business, that's the 30,000. So we added all, then we got the 286,940.
Since Pakwesi was not able to keep proper record of his account, my group members and I stood in to prepare his income statement and statements of financial position for him. This will be the end of our presentation. Thank you.